Welcome to this fourth in the series on trading market cycles. Today I'm going to use an example trading ES futures cycles, but this applies equally well to the Forex market, day trading, swing trading, stock market, futures, whatever you're trading, because it really has to do with the way that markets move through time. Now, in the past, we talked about other types of cycles, such as seasonal cycles or calendar cycles, expansion volatility cycles, and then we also talked about the chaos and the orderly cycle. Today, we're going to look at price action, a very practical thing that is very important for you to understand, reading pure price action. So let's take a look at what we're talking about here. When it comes to cycles and price action, this is very, very important to understand. Now, we have a trend. Alrighty, so let me bring up I've already got some markings there, as you can see, but let me bring up my drawing tool and I'll use a different color here to make it stand out. So we'll choose green. And so we're looking at this upcycle or this uptrend here. Now, in an uptrend, we want to make sure, and I'm just going to highlight with some yellow here so it doesn't get too messy, but in uptrends we want markets to move up in price and in time. And what that means is that we are using both time and price. In fact, W.D. Gann was famous for teaching this, the confluence of time and price. So when you're in an upcycle, it's not just about higher highs and higher lows. That has to do with price. And so that's fine. That's half of the equation. But what people rarely talk about is the element of time in a higher high and higher low. So that's what we're going to talk about right now. So when we have an uptrend like this, what we've got is, let me see the best way to, let me just take that off of there. Again, since I've already got some markings here, I want to make this as clear as possible. So here is here's your half cycle. From a low to a high, that's a half cycle. And then from a high to a low, that's another half cycle. So your full cycle will be from the low to the low. That is your full cycle. And then it moves up from there and we start a new cycle. There's a new half cycle. So that's what I'm talking about when we're talking about these up-down cycles. Market moving up, markets moving down. All right, now, when we're in an uptrend, we want to see two things. In other words, this helps you, the practical application of this is to determine whether the market is going to continue or, hey, we all know the trend is your friend until the end. So if that trend's not going to continue, we want a way of identifying that. So in an uptrend, we want, I'll do it this way here. So the range of the price going up should be greater than the range of the price coming down in the down cycle. And that just has to do with price. So when it comes down, it's covering that much range. When it went up, it covered that much range in price. All right? So pretty intuitive, right? And this is what most people understand and got it. So I won't talk about that too much. But now what I want to talk about is time. We also want to add the time element. So in this half cycle, we want from the low to the high, okay, there's our time. We want that time to be greater, I'm going to put a little space there just to distinguish this, from the time the market goes from the high to the low, again, in an upcycle. So, bring my arrow in here. Let's see, is that going to work? Oh, I see. I'm going off the chart a little bit. I can see, not off the chart, but off the screen. So again, that period of time as it goes up should be a longer period of time than when it comes down. So it's not just that it covers more price range. That's half of it. Yes, that is half of it. But if you want the truth, the whole truth, and nothing but the truth, not just half the truth, you also have to look at how much time it spends coming down relative to how much time it spent going up. Now, this is called right translation. So if you want to get really into some specifics and technical analysis here, and I find, unfortunately, that this is not taught very often anymore, which is sad because it's actually really helpful. So what right translation means is if we look at this whole cycle, Okay, again, really it's there that we put on our low, or do we put it in there? No, actually the low comes in right about there, and the high is up there. Okay, so there's our full cycle. Now, if we were to look, and I'm just going to approximate this, the halfway point between the low and the low. All right, so in other words, from this low to that low, where is the halfway part? Is it at this blue line? No, that is to the right of the midpoint. So again, I'm not going to measure this exactly, but you'll get the idea. So let's say I'm just going to eyeball it here, that this is the middle. In other words, if we were to take this square and cut it in half, that is your midpoint right there. Right? That's your midpoint. Now, if the high comes in to the right of that midpoint, that is what's called rate translation. And essentially, that's another way of measuring what I was just talking about, that the market has spent more time going up than it has been going down. All right, but there's an official term for it. Now, if the market made its high over to the left of the midpoint, let's say it went there, and then it spent all this time coming down. That's called left translation. It came into the left of the midpoint between the low and the low. And then that would be called left translation. That's not as strong of a signal for it to continue going up because, hey, again, talking about practical trading and not just theory here, that's what we're dealing with. We're dealing with the issue of, okay, I'm going to take a trade, I'm looking to go long, but I got to trade the hard right edge of the screen. So do I have a high probability of this thing continuing to go in an uptrend after I get in? And this is one way that can help determine that. So the dynamic behind it, by the way, it's not just charting or geometry or theory. There's actual practicality behind this. And what it means is that you're getting a very strong impulse move when this happens. So it goes up very fast in a short period of time. And the way that affects the market participants psychologically is they feel like, oh, gosh, I've missed out on this move. We had a big impulse move, boom, and I got left behind. So that's part of the mass psychology that's going on that discourages people from coming in and buying after that event. Another very practical aspect of this is those big moves that happen in a very short period of time are often caused by news events. Gossip, rumors, news, sometimes that's, fake news. But anyway, the point is that the market is reacting emotionally in a very quick knee-jerk reaction. And it may then very well say, oh, okay, that deal is done, that news is over with, the money was made on that news, or later on, it could be just minutes later, they say, oh, that wasn't real news, okay, that was just a piece of gossip or rumor, or because the market's responding to news so quickly, they might then evaluate it. See, when news comes out, they usually just read the headline. And they'll say, oh, that's exciting. And then after the news comes out and they've taken their trade, their initial trade at least, then they read, paragraph 1, paragraph 2, paragraph 3. But they don't take the time to do that when the news first comes out. And then they read all the qualifiers of that news and they're like, oh, well, the headline sounded good, but now that I read all the details, I guess it's not as good as I thought after all. So these are the kind of dynamics that happen. This is the reality behind the price pattern. And then when people think these things, of course, they're less likely to follow through. So that's what the price pattern means in practical terms. All right, let's get that off of there. And I got one little extra slide here for you. So there's a tool. Now you can do this with just eyeballing it and getting to understand price patterns and kind of get these ingrained in your brain cells through repetition, and that's totally cool. I actually prefer to use tools that are objective mathematically so that I don't have to depend on my discretionary evaluation. And then we have a tool that's mathematically based. Then you have an objective evaluation, but you also have a mathematical one that you can create rules with. So that then you can build a rule-based system, which I think is very, very important. So I've got a cycle indicator that I use. It actually catches every single cycle high and low with amazing precision. It's very accurate in identifying the final high and low so you don't get stopped out so often after your entry. And it's not an indicator that I sell. In fact, it's not even a proprietary indicator, quite frankly. It's an indicator that is already on your charting platforms. So, in fact, it's one of the most common indicators that is on charting platforms, but it wasn't designed as a cycle indicator. It wasn't designed to time markets. So I modify it. I just go into the parameters or the inputs, and we modify a few of the inputs, and we turn it into a cycle indicator. So if you're interested in that, it takes about an hour for me to help you get it set up in your charts and then to give you a tutorial on how to trade it. Because frankly, it's very counterintuitive how to trade it. And a lot of people would look at it and say, oh, this doesn't work, until I show you, oh, okay, here are the patterns you trade, here are the triggers, and so forth. And then, in fact, I just had a gentleman write me the other day who was already a professional trader and said, wow, thank you so much for this. It's already improved my trading, even though I was making money. So I offer this absolutely free, no charge whatsoever. Just join me on the webinar. Depending on when you watch this video, the free webinar may or may not still be available, since things last here on YouTube for years. But anyway, just send me an email, barry@topdogtrading.com, if you're interested, and we'll send you an invitation to this if it is still available. I love doing these videos for you. Please go ahead and leave a comment below. Let me know if you like the videos, and give us a thumbs up. Share the video below if you would. Really appreciate that. All good things. It's good to share good things, right? Share good things with good people. And I'd love to help you in any way that I can. Oh, another thing that I have for free right now is I'm giving away one of my trading courses. And this is an actual course with videos. And there's 5 videos in it, so it's just a little mini course. But in it, I share with you some very, very practical things you can actually incorporate into your trading, including my rubber band trade. And this rubber band trade is a complete trade setup that I'll teach you. And my intent is, hopefully, you can start making money with it without having to spend any money with me or anybody else. And yeah, I love to get you making money first before you make any kind of investment. And obviously do it on paper or simulator trading before. But I give you all the entries, the exits, the rules, all that stuff absolutely free. Just click that little icon in the top right-hand corner of the video, or if you're not watching on YouTube, then there's a link below or an opt-in form on the side. Once you do that, I'll send you a link to the course with my rubber band trade strategy.